Hey everyone, this is Tim Picciott, and today we are joined by economic historian John Sneisen, also of World Alternative Media, and we are joined by Kirk Chisholm. So Kirk is recognized as being one of the 7 most influential advisors in America, according to Investopedia. And just for the record, we do work together. So he is, one of the guys who I talk with. Actually, the 2 guys who are on screen right now are probably the 2 guys I talk to more on a daily basis than just about anybody. And they never talked to each other before. So it's good that we're getting, the meeting of the minds here today. But and obviously, I wish you guys, a happy Easter. But welcome to the show, Kirk.
Hey, thanks for having me on, Tim. This is going to be a lot of fun.
Yeah, well, the first thing, and what we're going to show right now on screen, and you guys, the people can see it, but you guys can. It's a picture of Jim Cramer, and it's saying the Dow's best week since 1938. And peakprosperity.com, Chris Martinson is saying this photo captures exactly why we titled today's podcast with Talib, the unfairness economy. And then then goes on to show there's been a 96% drop in airport traffic, but yet all the airlines are up, 18% on United Airlines, 15% on American Airlines and other airlines, similar stories. And then, this article is talking about being long pitchforks and water canyons. But then what I really want to get, Kirk's take on and John's take on as well is, are we in this, V-shaped recovery? We're showing CNBC right now, and it says a bear market rally or V-shaped bounce. And then they're going to have a trader break it down, but we get something even better. We were going to have Kirk Chisholm be able to break this down for us. But if we go into the first article right now, a market completes a 50% bear market retracement. And as the article goes on to say, if you wonder why we're seeing a huge divergence in the past 3 weeks between the economy and where investor psychology has taken the market, just remember, it's all about the Fed. Market psychology is having a V-shaped recovery from total panic while the economy still looks horrible. S&P futures implied volatility is down 50% from the max panic level that we hit mid-March. Can the psychological rally be sustained? Is this just a vicious bear market rally? Will the reality of a devastated global economy pull the market back down? And if the market price action shows us that investors are growing fearful again, will the Fed just throw up their hands in the air and say, sorry, we gave it our best shot and that's all we could do? I don't think so. In for a penny, in for a pound. And this is from Victor Adair of PI Financial. And then, really, I think the crux of the article, as we go on all the way down to the bottom, it goes on to say somewhere down the lines, here we go. So this is just some of the things that we have of the economic backdrop right now. We've got a complete shutdown of the economy, 15 million jobless claims in 3 weeks, 20% unemployment, 20 to 25% negative GDP growth, 30% of mortgages in forbearance, a dramatic drop in both personal and corporate consumption, a massive reduction in capital expenditures and private investment, a crushing of consumer and business confidence, a depletion of consumer corporate savings. And then finally, the article goes on to say, no bear market in history for any reason has ever ended with valuations between 20 and 28% earnings. What does Kirk Chisholm have to say about this? So we got some people thinking it's just a straight up V recovery. Other people thinking, hey, this is going to be a lot longer. Then we've got Ben Bernanke saying, hey, this is actually just a snowstorm. But, you're up there in Boston right now. You know a thing or two about snowstorms. What do you think, this has to do with? Is this a snowstorm or do investors have a lot more, you think, to, be on the lookout for, Kirk?
Well, I want to start by saying I want to make one correction. I'm actually not in Boston at the moment, down Cape Cod, because I want nothing to do with Boston right now. It is a complete mess. You can't go outside. It's just, I can't even describe how miserable it is. And I'm down here on the beach and I love it. So we decided to use a little financial resilience and get out of the city early before other people figured that out. But to get back to your point, I don't see any reason why we wouldn't be at all-time highs by next week. I mean, they're printing money. They're throwing money left and right at everything. They're trying to boost up asset prices to the moon. As Tim knows, I'm generally a pretty even-keeled guy, but I have to say, what they're trying to do doesn't really make any sense, but it doesn't mean it's not going to happen. I mean, one thing I've realized long ago is if you think about what's going to frustrate the most amount of people, that's probably the most likely thing that's going to happen. And right now, the thing that would be most frustrating to the most amount of people would be keep going higher. Now, it doesn't make any sense. I don't think it makes any sense. Actually, right now, we're actually taking out some protection on the position because the index is, as you said, it's a 50% retracement. We started putting on protection right before on Thursday, right before the market closed for Friday, because the Friday was off, and we looked to put more on Monday because I just think it's I think it's nice that it bounced, but I don't see how this market is going to rebound. I think if by the end of next week, if they said, all right, we're opening everything back up, we'll be fine. I think everyone would just say, all right, it's a bump in the road. All right, I acknowledge it. We just say, yeah, these earnings are going to be really bad. Let's just ignore this quarter and just move on. And I think people would probably be willing to do that. But given the fact that, I mean, just going by my kids, I got kids, they're not going back to school until early May, and that's assuming they go back at all. Everyone I've talked to says they'll be lucky if summer camps are going to be open. So if we're talking 3 months, 6 months, 9 months, some people are talking about whether school goes back. I don't see how we're not in another depression.
Yeah, Bill Gates says no one should have any mass gatherings until there's a mass vaccine. There's a mass vaccine of the population, and there's that's 18 months away. So
right.
I mean, but I don't know who made him president all of a sudden without having any degree on anything. But so. people
listen to smart people. It doesn't mean they're right. It's like people follow celebrities. Doesn't mean they know what they're talking about, right? So, but I think what we're going to see is, from everything that I've read, it sounds like what we're probably going to see is we're going to see a little bit, at least in Boston, they said that they're going to start opening things up when they realize that the hospitals are not getting overwhelmed. So if by the beginning of May, the hospitals are not overwhelmed, then they're going to start opening it up. That's what I've heard. Now, that has nothing to do with what the federal level is going to say, but I just don't see how this is going to be a good thing. I mean, if you think about,
I think we should just keep Boston and New York City and like Los Angeles. We should just quarantine them for like 5 years.
Put up a wall.
Yeah, we should build a wall just around those places, so to speak. Sorry, you do have to go. You do have to go back to those areas. So I know that you can't trash it too much. So. I escaped New York ahead of time, so I'm able to.
Yeah, you were lucky. You went to a much better climate. But I think at the end of the day, I mean, here's what it comes down to. You have big companies. You've got like the I won't say them because I don't want to get in trouble from the regulators, but just say the big companies, the online sales companies, they'll do fine. The large large cap companies in general, excluding travel and hospitality, should do okay. In general, they have the balance sheet to sustain long periods of, let's say, bad conditions. But let's just for a moment just say that they're not going to get bailed out, and I think we all know that they will. Let's talk about the small business owners. They're the lifeblood of the U.S. economy. And all they gave business owners was 8 weeks of a boost of, free money, which I have to say was pretty nice. The fact that they did that, because
eventually
the recessions. Well, yeah, eventually. Yeah, that's a whole nother problem. In past recessions, they totally ignored the small businesses, so at least they're giving consideration to them. But I think it might be a few months before they actually even get any money. I mean, we're going through that with a bunch of clients, and it's a mess. It's not that anyone's trying to be hard. It's just there's a big bottleneck with the banks, with the regulations. They wanted to get the money in the hands of business owners yesterday, and it's a huge bottleneck, and people are going to get hurt. And if you're talking about a business shutting down for 6 months, restaurants have a profit margin of about 1 to 2 months. That's their profit margin. So if they have to pay rent and they can't make any revenue for 6 months, we're not going to have any restaurants in this country at the end of this. I mean, if you really think about it, the bailouts are going to get bigger and bigger because they're going to have to. They can't just say you can't leave your home and, oh, by the way, sorry about your business. We're not the whole country. We have 50% unemployment overnight if they did that. So I think there's some significant problems, and I don't want to take up all the time. I want to let John talk a little bit too, but I think there's some significant problems out there that I foresee. I don't see this going away soon. I think this is a dead cat bounce. Earnings season is going to start really soon, and it's just going to start. It's going to look ugly. We'll see if Wall Street takes it with a grain of salt. But the way that they're printing money, Wall Street tends to look at the Fed's printing money. We're just going to boost the market up no matter what the news. So honestly, it's a toss-up here. I think I'm going with the 50% retracement, but I could definitely see the argument for it keep going just because the Fed's printing money and that's how things work now.
Now, do you have ways to help protect your clients because obviously you have a deflation risk that's out there in the market, but also the inflation risk of the Fed is going stupid. I mean, not if they go stupid. I mean, I think they've already crossed that Rubicon, and it's just it's just how quickly and how stupid they'll get. And no, here we are, three high level guys, just using these like terminology of like just how stupid, but they've already gone beyond even what I even thought was that they would do in such a short time period. And people accuse me of exaggerating or trying to fear monger when it comes to the Federal Reserve. And they've even blown away what I thought would be the initial right off the bat. And I think I did see the other day, I don't have the exact stats, but it showed how much corporate businesses pay in taxes. Then it also showed what the individuals pay in taxes, and basically the corporate tax bailout is going to be way more so in terms of what the corporations pay in versus what they end up receiving, they're getting way more than what they even pay in taxes, whereas the individuals are getting, it's like chicken feed. So okay, well, Mr. and Mrs. Joe Smith, you get $3,000, but yet as a family of four, but yet we have to get $60,000 in debt to get that $3,000. But luckily, because of government indoctrination, people aren't really good at math, so people are like, oh, just give me my $1,200. But John, I mean, let's have you go in there and let's see what you think about what the market's up to, and if this is just a snowstorm, and where you see things headed.
No, I definitely don't see a snowstorm, and this comes back to my risk report that I put out in October 2019, called the Global Risk Report 2020. I called it "We're entering an economic ice age," because problem is historically when you push towards too much debt into society, you hit a point that's called peak debt in any fiat currency cycle throughout history. And when you hit that point, when there's nobody else that could lever up and get into more debt, because you hit a limit, because with on the one side you have the salaries of employees and bonuses and all this stuff, it needs to increase with the asset prices and everything else, or else you end up with like San Francisco, where people live in cars that have full-time jobs, all this stuff. So over time, you get that disconnect, huge disconnect between the working class, their salaries, and what actual prices are going up, and then you get a huge backlash because they can't. Even the working class can't get into more debt because they just simply can't afford that more debt on top of their current salaries. So that's what is the underlying cause is we've hit peak debt, and the $10 trillion in corporate debt out there. And of course, in 2018, 78% of that was rated junk. That came out in the United States. So there's a huge warning there with this corporate debt. So the stock market could do whatever it wants, and they'll probably try to prop up the stock market as they have since 2008. The two main focuses was the real estate markets around the world and the stock markets. Here in Canada, for example, we've just had a bubble that have epic proportions, especially in Vancouver and Toronto, where you've seen, the housing prices go ballistic. Like we had almost 15 to 20% gain in a year, in some cities around Toronto, and that is not sustainable whatsoever. But that is what they want to give this wealth effect into, where most people have their retirement savings, which unfortunately today most of it sits in houses, or you have a little bit in your 401k or in your RSP here in Canada. And that is the major focus, that they need to make the people feel wealthy, the baby boomers, because they're the ones that actually has money now. Our generation, Tim, has very little money actually saved up, and can't buy the stocks that now we're getting forced to sell, because where a lot of baby boomers are hitting that age where here in Canada at 71, where you got to start selling off your portfolio. And then they also have to, a lot of times they want to, downgrade from what they have. And if they saved, all their money into their house, they want to sell that house now. But who's going to actually buy that? Because if you're in Toronto, Vancouver, and San Francisco, or New York, those houses or apartments, they're way too over expensive for anybody to really afford. And then you're going to see as that deflationary pressure on top of all the debt that we have is going to start taking hold and really, put a lot more pressure onto the economy. So I think we could see, a recovery from this, a quick recovery. But I definitely don't really see it, because they're basically put on a Band-Aid on a gushing wound. And, eventually it will just stop, profusely bleeding again. And they probably have to, what they should have done is put on a tourniquet and actually, stop the bleeding. You would still lose the leg, still be horrible. But I think that what they really needed to do is not, just bail out left, right, and center, put out all these programs. Like, for example, it's hilarious.
Well, I think they shouldn't have cut off our legs and our arms to begin with, so we weren't bleeding out to begin with. So what was it? Harry Brown has said the government's good at breaking your leg and then giving you a crutch afterwards to help you out.
Yeah, there you go. Yeah, no, it's interesting because you're looking at like the bailout that the actual citizens are getting, versus like I said that let's say that we just keep it at $6 trillion, but it's going to be way more. But if we did that and then we did the 1,200 to every working class citizen that was getting paid under 75,000, but there's a lot of people that won't get paid because they don't qualify, all this stuff. But I just did a blatant run all those numbers without taking account for all those like people that can't qualify. It would be 1.77% of the total bailout money went to actually the people that are working, and then of course very little goes to the small businesses that are the backbone, and a lot of them here in Canada, it's way worse than what we were talking about. The small mom and pop shops, a lot of them don't even have cash past like a week or two. There's that much indebted. They lived on debt, and when you become addicted to debt, it's like trying to wean somebody off of heroin. I had my neighbors had their son. Unfortunately, he was hooked on heroin, and it takes forever to actually wean him off, and he almost died. Going back on it. So what we're seeing now is just the Fed is trying to, inject more heroin into the system, all this debt that they're still going to grow the debt, and people that are, deferring payments, all this stuff, they're actually having to pay even more debt now at the end of it. So I just can't see how we're going to get better off. I see that we're going to see this, dead cat bounce, as Kirk says, and then you're probably going to see another downturn. But again, we got to remember what happened in Venezuela. I just studied Venezuela very greatly recently. And, their stock market went just ballistic, after a while, because there was so much money getting pushed into the markets. And I think that is a potential that, you get that tectonic plate of deflation versus inflation, and suddenly one of them breaks, and you got massive inflation just flooding into the economy potentially. And I see, of course, the stock market being one of those inflationary pressures where it would hit the most probably.
Yeah, and I wanted Kirk to comment on this, but I also want to point people to the screen right now where we've got this is former Fed governor of Dallas, Richard Fisher, and on screen it says cocaine and heroin. Now it's a 6-minute clip, so I don't know where in here it actually says this, but in the clip he says that basically that the economy was being maintained that the economy was being grown using heroin and cocaine, and now this is as of like 3 years ago, or let's see, from 2016, so it's almost 4 years ago to the day that he was saying that the economy was growing on heroin and cocaine and is now being maintained on Ritalin. Well, now it's being maintained in like fentanyl or like some other crazy stuff they have even above that. So sorry, Kirk probably didn't know we were getting into all this, where this conversation is going to get off the rails too. But I know you probably got a lot to say about what John was up to.
Yeah, I think there's some things they put into horses to get them to race faster. That's probably what it's on now. No, I want to make a comment on John's comments, because I have a lot of respect for John, and he's a smart guy, and I wanted to hear more about this. But he said we'd be in an economic ice age because of the amount of debt. I would actually, so I've done a lot of research in the last 10 years since 2008, since that crisis, and I started doing this thing called the inflation monitor. Well, very quickly, I decided I either have to table this because nobody was paying any attention, or I would have to rename it because it was deflation every single month. And it got a little crazy because, the statistics show, well, there's inflation. We have this positive inflation, yet we had deflation every single month. All the other statistics were showing me deflation. Now, obviously, it wasn't showing up in the CPI, but it showed up in a lot of other statistics that were relevant. So I guess the comment I'd want to hear John talk about is, everybody talks about, well, we have too much debt, and we have too much debt, so we can't have any more, or we're going to go bankrupt. I don't think that we can go bankrupt. I think the economic conditions will be different, and this is where I want to hear John's point of view. I believe we're in deflation, and we're just trying to create all this money to create inflation, which of course isn't happening. You could look at the velocity of money to that. So John, maybe you could kind of comment on that, because I think we probably have a lot more to go. We could probably create a lot more debt from here and still keep pushing asset prices higher. What do you think of that?
I think that's definitely possible. I wrote an article 3 years ago talking about the Japanification of the U.S. economy. and that being, that the Bank of Japan has, bottled the debt basically that, the Treasury in Japan has created. So you could see a lot of that happening where they're just go out and buy all the debt directly. Now they're doing programs, right, where they have corporate bonds that they're buying because of default risks and all this stuff. So yeah, no, I definitely see what you're saying, that there's a way that they're going to try to fight it. They can try to fight it like Japan did. Japan hasn't gotten to that point, as I said, where one of them has won yet. It's just like constantly fighting each other, the deflation and the inflationary aspect of the economy. But, definitely there's, of course, the Federal Reserve will never go bankrupt. It could print itself into oblivion.
They actually passed a law saying that they couldn't go bankrupt like a couple years ago. And I'm not even like, they did some accounting gimmicks saying that they couldn't go bankrupt. And actually, I had a question that got asked to Janet Yellen through my congressman, David Schweiker. He's like, does anyone have any questions? And they actually picked my question. And actually then Peter Schiff used it in one of his. Maybe we can get some comments too about Kirk with Peter Schiff. But we ended up getting... he ended up using it as part of his podcast. He's like, this is a pretty boring episode. It's boring commentary by the Fed, except for this one question that snuck through. And I mean, it's super inside baseball, but we've got a lot of inside baseball guys probably watching this right now. And basically what the question said was, right now you get 6% of all the interest of all the dividends but what happens in the event where you're not making any money anymore? What happens instead of sending 6% profit to the Treasury? What happens if rates actually do go up like you say they're going to go up? Then that interest rate risk will then actually create losses. And then also because of imbalances between what you're paying out to the member banks versus what you could be getting from a bond, if that ends up if let's say you're collecting 1% and then you're paying out 2%, and are you gonna have to send the Treasury a bill? And she actually said that my scenario is mathematically impossible. Now, I mean, an alien attack tomorrow is possible, and yet this is exact. But then you'll see that the recent language of the Fed Treasury, like that whole deal, is that basically that the Treasury is going to give them $454 billion of funds. They're going to lever that up 8 times, and that if there's losses, that the Treasury is in a first loss position. So that in essence, that the Fed gets to keep profits if there are any profits, but then we the people then get stuck with all the losses if there are losses. But yes, now people have then somehow misconstrued that comment to mean that Trump is now the new chairman of the Federal Reserve and that he's done like a one around to somehow sneak attack and really take down the Fed, when really the Fed's only product is debt. And now that you've given them the ability to own more things, I mean, it's all this money printing. It's a very high level, really hard concept to grasp your head around, trying to think of how printing money can actually lead to deflation. But then you take a look at money velocity. I mean, even before this crisis, I mean, it was basically frozen. And so the Fed, there's only so much debt corporations are willing to take on and people are willing to take on, and now people aren't willing to take them on. So you've got the Fed coming in, and we take a look at the screen over here. They're buying ETFs directly, and I don't know if you guys can even read that on the screen, but I'm not going to read them off for regulation reasons, and we're not hinting at anybody to go buy those. But this is essentially corporate fascism, having the Fed coming out and buying individual sovereign bonds. And before I kick it back to John and Kirk, I just want to be able to show everybody the money gun. So we've been making it rain nonstop with Fed, and to keep Trump, keep America great again. We do have, for Kirk, we do have Trump dollar bills over here. But yeah, it's just we got to have some levity in this conversation, as we're just printing our way to oblivion. But I think it is a fascinating discussion of how printing money can lead to deflation. And it was one of our founding fathers said, first by inflation. If we ever allow a private central bank to issue the currency and credit this nation, first by inflation, then by deflation, we will end up homeless on the continent our forefathers conquered. And so and we asked if things are going to go back to normal. Is one of the things we asked in the beginning. And I think it depends on who it's going to get back to normal for. So I think it will get back to normal pretty quickly for the top 10% in America, but for the bottom 90%, I'm not sure how quickly things will get back to normal for them. And maybe if I can have maybe Kirk comment on that.
Yeah, I mean that's a great comment, Tim, and to kind of finish off from John's comments, I think that he made a great point about Japan. And we did a lot of research in Japan a bunch of years ago, just because we saw them as just being slightly ahead of us. They went through their boom, and then they crashed, and they haven't come out of it, and they're just in this stagnation for the last 30 years. And their market has bounced around a lot, and they just keep printing money and they just keep buying it up, and it's going nowhere. And they're in deflation. They're stuck in deflation, and everyone's afraid of becoming Japan. I think we are. I think we already are where Japan is. It's just the asset prices in the market haven't reflected that. But income and people's income, median income hasn't changed. Like there's a bunch of stuff that hasn't changed. Look at commodity prices have gone down. They keep dropping. So as far as I'm concerned, we're in deflation. Just the stock prices aren't reflecting that. And what the Fed's doing is basically manipulating stock prices and real estate, I should say, because real estate also has gone through the roof.
And I love when Trump comes out and calls, China or somebody else a currency manipulator when the Fed is the biggest currency manipulator in the world. I mean, I don't know how that point was never lost on anybody. Sorry about that, Kirk.
Yeah.
So if you kind of look at, and that's a funny comment because everybody says, well, is the Fed manipulating the markets, or, is Fed manipulating gold? Well, every central bank around the world is manipulating the markets.
Or else they wouldn't exist. That's literally their job. Their entire purpose is manipulating the markets and what should be.
Yeah, I mean, they're acknowledging the fact that they're doing it. It's not a secret. People are like, oh, they're going to manipulate the markets. They already are. That's part of their job, like you said, Tim. So I think that the deflation, the way I see it is we'll hit deflate. We're in deflation now, just like Japan. And then at some point, almost overnight, we're going to hit inflation and it's going to go through the roof. And I don't know when that's going to happen, but that's when hyperinflation happens. But all these people were saying, oh, it's, buy gold because you're worried about inflation. You're too early. It's not that gold's a bad investment. We own gold too. I mean, I love gold. Gold it's doing really well and should continue to do well. But the point is that, when you really see the way economies work historically, deflation supersedes, hyperinflation. And that's just what we have now. And who knows how we're going to get there. But as long as the velocity of money keeps dropping, then we're not going to have that inflation that people are seeking.
And deflation could actually lead to the hyperinflation because since our monetary system is based off of debt, and I would highly recommend people go check out my YouTube channel. And one of the videos on the very top says, we are all slaves to central banks. And in there, I used a clip from Hidden Secrets of Money Part 4 with Mike Maloney, where it shows that let's say this represents debt and this represents money. Since the currency is based off of debt, you always have more debt than you have money. And so in deflation, the entire system eventually implodes. So then to help protect it, I'll say help in air quotes over here, to then help the economy not go through a deflationary spiral, that they have to then promote inflation. But then, like Kirk was alluding to, that overnight it can flip from deflation to then hyperinflation and game over. It's thanks for playing. We're in South Park going around the roulette, and it's all gone now. What do you have to say about that, John?
Well, if people stop using, the currency in the first place, that's also what have created hyperinflations throughout history, because then the government has to just print exorbitant amounts of cash in order to keep themselves running because there's no income through taxation. That have happened a lot through history, and it comes to a breaking point where people's like, well, I can't take US dollar as a medium of exchange anymore, or the Canadian dollar. But it's not going to happen in the US first. If that happens, it's going to happen in the periphery states of this current global fiat currency standard. It's happening in other countries first, and then eventually, when there's nowhere else to hide, we're in the United States. But another interesting thing, we're talking about currency manipulators, and of course, the US has been a manipulator since 1930s when they actually created a fund, and we're going to actually get into that a little bit later about this interesting fund, the Exchange Stabilization Fund. It was created by don't threaten
Kirk and I with a good time talking about the ESF.
Yeah, it was created back in 1933 during the Gold Act, and they actually created that slush fund from $2 billion of the revaluation that they got from taking some people's gold out of their hands and then creating that. So they actually created this. Hey,
that was a liberal policy by the bastion of all liberals, FDR. How dare you, John Sneisen? Well, and when they were putting people in concentration camps with the Japanese and Italians, they were also taking their property. But that's liberal. Sorry.
No, it's interesting though. It's funny. It was actually Trump just recently also said that why is China still a developing economy? Then we should also be developing economy. He said that was another funny comment that I thought that he had. But yeah, no, it's I think it just comes down to the point where the people can't afford food anymore on their table. We can keep on this scheme going. Just look at France and other countries where people literally are in the streets because they can't afford food anymore. That's where you hit throughout history with this currency problem.
Except now you're not allowed to be. Except now you're not. We're so free. You're not even allowed to be on the streets.
Well,
anymore.
it was a perfect. I guess it was a perfect fit because there was so much protests around the world, and then now it's not allowed.
Well, I think you did tease this for the next video, and so guys, I appreciate everybody hanging with us for this video. But what we're going to do is we're going to throw things over to my channel. It's the Tim Picciott, the Liberty Advisor, and we do want to say Happy Easter to Luke Radowski, who's taking a day off. Maybe he's practicing how to say my last name, hopefully, because we know he's basically been saying it like the entire economy is going to Picciott, and so one of these days he'll get my name right. But until then, Happy Easter, Luke. But this is what we're going to tease you guys with. We've got Jim Cramer just absolutely gushing over the Federal Reserve. So in the next video on the other channel, we're going to talk about the Federal Reserve, all their alphabet soup programs that they're coming up with, and basically how they're stealing our money to go benefit the banks. But here we go into this clip from our good friend Jim Cramer.
And I'm very impressed. The Fed is just the Fed is on its game. And this is what is needed because we got to fight off a depression. We got to get America open for business.
Yeah, so there you go. Jim Cramer, the Fed is on its game, and we're going to see what game that is.
If it's a great idea.
Sorry, I got an advertising playing in. But anyways, thank you guys for hanging. This is Tim Picciott along with John Sneisen and Kirk Chisholm with Change News. Actually, real quickly, Kirk, where can people find out more about you? I know you guys are, I got like the LinkedIn champions down here with, I think each of you have like 35,000. But where can people find you, find out more about your firm, and give a quick plug? Also, you are the host of the Money Tree podcast. So if you want to just give out all your credentials and where people can find you.
Yeah, thanks, Tim. Yeah, so you can, I'm a principal and wealth manager at Innovative Advisor Group. You can go to innovativewealth.com. And on that website, you'll find everything about me. Tim, I work with Tim as well. You can find Tim there. If you want to learn about self-directed IRAs, we have probably one of the best resources on the internet for self-directed IRAs. And you can find me on the usual social media channels. And as Tim said, I'm also the host of the Money Tree Investing podcast, one of the longest running investment podcasts out there. So yeah, thanks a lot, Tim.
No, thank you. Thank you so much for being such a great wealth of knowledge. And I also recommend, if you guys go over and check out my channel, we did a video with Kirk probably about a month and a half ago, and I super highly recommend. I didn't want to have a replay of that video over here, so you guys are going to get all brand new information over there. And coming from somebody who made most of the gains last year and almost got none of the losses this year, super valuable information. If you want to check out how we were able to do that, you guys can head to my channel. Also head to innovativewealth.com. And then John, you guys can go to theeconomictruth.org. I was showing this on the screen for people where you guys can go and get one of his reports. Many reports actually there. But anyways, thank you guys for hanging. Catch us on the other channel, and hope you guys have a great Easter. Take care.